Are we getting gouged at the gas pump while ExxonMobil execs are making billions and lining their pockets? Kinda, yeah, but they're in the hot seat with a House hearing today. Let's talk about what that means for you and me. So, Exxon has record profits, $9.3 billion a quarter, up from about $2 billion a year prior. Now look at this. Dan Price says it's been using the money to buy its stock and to enrich execs and shareholders. But there is a time when that will stop. Or at least we hope so, because today the House subcommittee is holding a hearing for oil firm execs on this gas price gouging. What are they saying about it? What are we saying about it? So they're going to be in the hot seat at a House subcommittee hearing. Now this is about the gas price gouging. They have to answer for this. The rise in the gasoline cost came from a spike in crude oil prices, which is the highest has been in 14 years, and everyone is feeling it at the pump. I mean, I see the price difference. Do you? I think a lot of us do. Now listen to this quote here. He says, the chief reason driving retail gas prices to record highs back in March was Russia's invasion of Ukraine against a tight global oil market. It's saying that there has recovered quickly from the lockdowns, but these sanctions against Russia oil exports are really heightening this concern about supply and demand and shortages. So the oil execs are saying, hey, look, it's not our fault. These are these Russian sanctions. They're really messing things up. But at the same time, they're showing record profits. They are posting billions of dollars and just shoving it in their pocket is what a lot of people are saying. And I think that's the whole point of this hearing, is to figure out what is going on here. But the reality of the situation is this. Quote, that's of little comfort for U.S. drivers who paid an average of $4.35 a gallon for gas on March 11th, the highest price on record according to Gas Buddy data. So when we really look at the real effects of this in our pockets, because the wages aren't going up to match inflation. If you get a 2.5% raise at your job, that's pretty good, but inflation outruns that. And then gasoline, and when we look at all the other cost of goods that are just rising along with it, it all adds up. You take your car daily wherever you go. We're going to fill it at some point, don't we? At what point does it break? So we take a look here. This hearing comes amid politicians and consumers pointing out that many oil companies have turned hefty profits amid the surge in oil prices. Check this out. BP posted its highest profit since 2012 last year. So with all of this going on, all of these shortages, supply and demand, someone is doing very well for themselves. Now, what exactly is going to happen here? Let's continue to take a look. In what could give rise to calls in the US and Europe for profit windfall levies or the like connected to rising energy prices, Exxon said in a filing late Monday that its first quarter profits could top $9 billion, compared with $8.8 billion in the fourth quarter. All the numbers are here. All the truth is here. All the data is here. Everything is going up. The oil execs are working and really boosting themselves up along. So when we take a look at how the real true matter of this is, we can look at these numbers on the page, and that does mean a lot. But like I've been saying, when you look at the real truth and what it feels like on the ground level for most people, Americans, everywhere else in the world at this point, that's what we have to look at. That's the point, I think, behind this hearing is it fair to be in this position of power and gouge it up and then everyone else suffer for it? Now, you could argue that they're a business, they want to make money, however, at what cost? This is what is the biggest pain point, I think, for most people at the pump today. So let's keep on going here, seeing what's going to happen in the future. Exxon is expected to report late this month a FactSet consensus calls for adjusted per share earnings of $2.17, which will compare with adjusted EPS of 65 cents a share in the year-ago quarter. So there's a lot of different information here that we're going to look at. And that people look to the oil company profits. This is a good quote here. People look to oil company profits and think they are raising gasoline prices arbitrarily, but are also potentially not looking at the, quote, tremendous losses for those firms in 2020, said Patrick DeHaan, head of petroleum analysis at Gas Buddy. So Gas Buddy is an app for gas, of course, and what I think is a good point to consider is that they did have a lot of losses in 2020, and so I feel like maybe they're recouping those losses now, as companies are wont to do, but at the same time, in doing that, the effects that it has on the pump is hitting us a little harder. So while they're trying to recover, where is that recovery coming from? Who is going to feel that recovery the most as they go about their way? Let's keep going here. So we go on down a little more, but gasoline stations are aware that the market has been extremely volatile, and the last thing they want to do is cut their price significantly by, say, 10 or 15 cents a gallon, only for wholesale prices to go up by 20 cents. So now the gas stations, we're looking at this point, they don't want to cut their prices down and do that to help us out. I understand they're a business, and then have wholesale prices go up 20 cents. So they cut a little bit and then they get eaten up by that much more. So it's really interesting fine line. Like, where do you walk this line? Where do you go with it? We feel it out on the street. The executives felt it with their loss back in 2020, and they're trying to recoup for that. But man, things are a little high right now, and I understand there is some atrocity, some horrible things going on in the world right now that is getting kind of penned for this, and I understand that the sanctions in Russia do have an impact on a global scale, but we need to keep going here. Take a look at this. In 2021, the price of crude oil accounted for nearly 54% of the average retail price per gallon of gasoline. So we look at the price of oil, that is what's half of the cost of gas. And I know when you go to your pump, you have lots of taxes and fees. Depending on what state you live in, it's a little bit different. And some out west are a whole lot worse than some other states out east. So when we really want to compare where we were then to now, look at this quote here. It makes sense that roughly 60% rise in oil prices as of April 1st from the same time a year ago would lead to a spike in gas prices at the pump. At an average of 4.175 for gasoline on April 4th, prices are 46% higher than a year ago, according to the Gas Buddy data. Now, when we look at that Gas Buddy data, let's see what's going on. So out west, you're looking in the mid fours for the gas prices, even $5.82 in California, and Nevada is over $5, getting a lot of trouble. As we go out east, the prices tend to drop a little bit into the threes and the fours, still pretty high. And as we continue further out closer to the East Coast, Illinois is a bit of an outlier, and we go into Kentucky and Tennessee, we're seeing upper threes. Even Florida is still low fours. As we go up to the northeastern, we're also back up to the fours. So the highest is out west, and the lowest is somewhere in this region right here with the blue states, and a little over here in the Midwest as well. So when we just think about how much markup there is on the gas, which we see it right here, the markup on a gallon of gas averages 30 cents, and after expenses such as credit card fees, retailers have, quote, net profits of around 10 cents per gallon. So I mean, the gas stations are not really making that much off of it compared to what they would like to make, I'm sure. And of course, when you go to a gas station, you buy milk, it's always extremely more expensive. I know it's around $4 or $5 a gallon compared to going to a grocery store, you're looking at maybe $2 or $3. So they do have to make their money somehow, some other way, but the gas is the draw, maybe in a sense a loss leader, but not exactly. You gotta look at what they're looking at too. So it's interesting. Now, we want to take a look at this quote here, okay? U.S. drivers consume roughly 9 million barrels of gas a day. Multiply by 365 days in the year, and by 42 gallons in a barrel, that's $14 billion in estimated annual profits from gas sales in the nation for all 145,000 fuel retailers. This is a big money business right here, and somebody has to feel the pain points, and I think I know who those people are. Quote, claims of price gouging along the gasoline supply chain are disingenuous, looking to scapegoat an industry that's under extraordinary regulatory oversight to distract from the inflationary pressures harming American consumers. Now, when we look at their side of things, they're just saying that it's kind of not there to blame, and then look at the whole big picture. What is the best possible case for this hearing? Where should and could gas prices go? I know some people may say they will go up, continuing on the path, or maybe they'll drop back down depending on what the government actions are, what some of these Russian sanctions and the whole Ukraine war situation, how it pans out. But I guess that's what that hearing today is to find out, isn't it? But I want to know what you think as well. So be sure to subscribe for more news and updates. I am Austin. Thank you for watching.